Welcome to the Business of Soil Health. I'm Patrick Smith, the founder of Soil Upside.
And I'm Sami Telleton, the co-founder of FarmRaise.
I am thrilled to have Ivana Gazibara joining us today. She is the Director of Prototyping at the Transformational Capital Initiative, which is also known as TransCap. Welcome, Ivana.
Thank you. Great to be here.
You're welcome. Yeah, wonderful to have you. TransCap is focused on systemic investing, quote unquote. Can you tell us what the heck systemic investing is?
Yes. And everybody asks that question, rightly so. It's pretty novel in many ways. And then at the same time, some of the ideas around it are really not. So, we know that all of these big challenges that we face, right, are complex systemic challenges. The things like climate change, biodiversity, poverty, water scarcity. And there's no silver bullet for any of these. And within the environmental movement, certainly, these ideas have been taking hold for about 15, 20 years now, as we are beginning to understand also the network effects between these different challenges also. So we're already talking about the need for kind of system change strategies as the commensurate response to these big complex challenges. But then for some reason, we don't talk about programming money the same way. And so TransCap, in a way, was set up to address that challenge because actually we do need to program money also using this kind of system change logic, using systems thinking to inform how we sort of design and deploy capital in service of cracking some of these big challenges. So that in essence is systemic investing. And it really kind of tries to turn the traditional financial orthodoxy on its head in that, as you know, the finance system by and large is still doing that silver bullet play. So we're still mostly investing in single companies, funding a single project, one thing at a time, single point investing. And those investments are not necessarily connecting dots or having synergies between each other. So practically speaking, that is what systemic investing tries to do, is program money in service of a particular mission using multiple different types of capital to fund what's needed and not just what's out there.
It seems like there's a fundamental assumption in that the way capital flows currently is insufficient, or the way that the market works is incomplete in some way.
Well, yeah, definitely. And I think that's obviously kind of a value statement, and it's obviously subjective, but that is certainly what we think, is that currently money doesn't behave the way that we think it should. And actually, money is a social construct, and that's totally changeable.
That's a really powerful idea, Ivana. And I'm curious how you got here. What drew you to this?
Great question. Mostly it says frustration and impatience, Sami, is the short answer to that. But the slightly longer answer is that I've mostly spent my working life in the environmental space, mostly kind of cut my teeth in the nonprofit environment, and did a lot of work actually designing and running these system change collaborations in sort of specific sectors and challenge areas. And one of the patterns that started to show up after a while is that, we kind of galvanize all these different stakeholders from within a particular system, whether that was dairy or shipping or something like protein. And we'd get people together, we'd get everybody to sort of diagnose what the big challenges in the system were, and to then work together to kind of look at what are the different solutions that we could activate to really create significant change. And the thing we were never really talking about is money, or not enough. So, these projects would often hit the wall because funding would run out, or, there would be a really exciting pilot project or prototype to run, but it was not funded. And so I started to think, actually, through these projects, we have a really good understanding of how money needs to move or where money needs to go. but actually we're not really acting on that. So I wanted to do something that essentially focused on using finance as a lever for change, which I think it is a really powerful and really underutilized lever for change, actually. So that was what sort of brought me personally to this work. Even though I'm not a finance bod, I should say I kind of come from the system change and foresight world rather than finance. So that's been an interesting ride as well.
It's notable to me how your journey parallels the journey that many land managers face when wanting to adopt
Interesting.
regenerative systems and soil health, where they come back to some kind of like financial access gap or gap in data about profitability impacts. But because we live in a capitalist world and operate in this environment, it really does come back to that sort of financial piece of the equation. I see that echoed in your journey too.
Yes, 100%. And some of the things you're mentioning are definitely things that came up during our work on regenerative agriculture transitioning in the Midwest. And I'm sure we'll talk a bit more about that later on, but yeah.
Later on, as in right now.
All right.
So why agriculture and why the Midwest of the United States?
Yeah. So, I mean, agriculture is one of those kind of quintessential complex challenges, isn't it? And I guess the Midwest is one of, well, globally speaking, is one of the most important agricultural regions. So both of those felt like really interesting as a sandbox in a process where what we were really interested in it was understanding how do you create financial blueprints for these sort of large scale transitions that we know we need to make, but we don't know how to finance. So if you were to sort of look at what financial architecture for that looks like, what comes up? So that was really our entry point into the work. And we found this wonderful partner and funder in the shape of the New Capitalism Project Lab, which is a sort of funder collaborative looking at seed funding ideas that are meant to kind of help rewire the economy. And so that got us started. And then we found a partner in the Meridian Institute, sadly now defunct, but they had been doing quite a lot of work in agriculture in the Midwest, specifically on kind of policy influencing. And they said, well, we keep coming up against this question of how do you finance some of the stuff that's coming up as really critical solution spaces. And so that was sort of the origin of the work.
How did you begin in the Midwest? I know that there's a systems map of regenerative agriculture for the region. Why start there, and what did you learn?
Yeah, so why did we start with the system mapping process? Mm-hmm. So we always do. This is the thing with our work. We find that actually understanding the lay of the land and doing a kind of systemic analysis of, you know, what are the drivers? What are the barriers? What are the sort of really sticky challenges where we try many different things, but the system is still stuck in those same places and has been for a while? And then what is that telling us about potential leverage points for change? And in this case, for us, the particularly interesting layer was, what are the leverage points for capital allocators? So the system mapping process, and in this case, we did something we ended up calling transition mapping because it was so normative. It wasn't really just about understanding what does the system look like. It was actually about trying to pinpoint where are the buttons that we need to push if we're funders or investors or governments to really create waterfall effects in the system. And what did we find out? I mean, we found out so much, and we published it in a kind of mind-blowingly complex, but still hopefully somewhat digestible Kumu map, where it's almost like we embedded a research report into Kumu. And we found, I mean, we don't have the time to go into all the details, but I would say, I'll tell you a few things that surprised us. one of which was how important cultural and narrative work is in this space. So we were not necessarily expecting to find that actually there's so much in this idea of just embedded norms. One of the kind of stakeholders we spoke to during the process of research said to us something like church, football, and corn in describing farming in Iowa, I think it was. And
wow.
And there is this aspect of, kind of culture and doing things the way you've been doing them for a generation and actually doing things the same way that your peers do them around you. So on the farmer and producer side, there was that kind of culture, like a kind of not cultural inertia, but sort of things that were holding the existing system in place. And then, of course, also on the consumer side, there's this kind of vast degree of unknowing. Like, we just don't know how vital regenerative farming is for the nutrient density of our food. I mean, that's just the tip of the iceberg. We have so much more research to do there, but also, perhaps more importantly, so much more communicating about that to do. And so, as a result, we have also this situation where consumers mostly don't even know what it is. They get organic, but they don't really get regenerative. And then I guess the other thing was, I think, candidly, naively, I came into this work thinking perhaps we'd come out having designed like a multi-asset class fund of some sort. Mm. And we came out of this work going, this is not going to be a fund. This is what we need is almost like a platform that orchestrates capital, because the other kind of interesting realization was that even though money is flowing into regenerative agriculture and different types of money as well. So, you've got philanthropic funders putting money into this, you've got VCs, et cetera, but what you don't have is that capital spectrum effectively talking to one another. And so actually so much more could be achieved if we could just strategically align a bit better what everybody is already doing in Regen Ag. So that was the other kind of key thing we learned. And that is what led us to then the second phase of work, which is all about designing a capital orchestrator.
I can't wait to talk more about the capital orchestration piece. Before we do that, I want to dig into the landscape a little bit more. And for anybody listening, I highly recommend that they spend some time with your Kumu map. Kumu, by the way, is a platform to what? Like visualize systems maps?
Yeah.
So yeah, there's a deep, nuanced systems map that TransCap put together in Kumu. We'll put a link in the description. I want to come back to the culturally embedded norms a little bit. It seems like in production ag in the US, yield is the North Star. Mm-hmm. And that's the scoreboard that not just producers use, but we use it at land grant university research. Mm-hmm. We use it for crop insurance. We use it for lending underwriting. So I'm curious, and there are cases to be made for a more holistic biogeochemical ag approach, increasing yield, but that's obviously not the purpose of regen or soil health. I'm curious how you think about that that seems to me to be the norm that defines the financial system. And so in ag, at least, how do you think about changing that piece?
So I think that is probably a longer term change. It's a change that needs to happen. But I think the other thing that's becoming apparent, and this is, research that's happening in various different pockets. I think Rodale Institute has done some of it. I know that IERA, the European Regenerative Agriculture Alliance, did a really interesting report recently looking at actually the impacts of regenerative farming practices on yield. And actually, regenerative agriculture looks pretty good on yield and actually looks really good on resilience over a longer period of time, which is obviously really critical for yield. So although it would be brilliant if we could change our kind of blinkered view on what matters. And there are different experiments in train that are trying to do just that, everything that's, all about how you value nature and different aspects of biodiversity, for example. I do actually think that there is something about a data unlock. So basically creating data sets that can help investors underwrite regen ag. Because it is a really good, uncorrelated, solid asset class in many ways. And I think that that's part of the unlock too, at least in the short term.
When you say asset class, you're talking about real assets in this case?
Yeah, also. Yes. I mean, I think in the regen ag space, obviously farmland investing has been popular and a solid investment.
So I think what I hear you saying on the yield question is there's still research and data that needs to be done to understand more about how soil health impacts not just yield, but also water infiltration rates, resilience, productivity across seasons, not across seasons, but across years. Is that kind of what you're getting at there?
Totally. And I also think it's also about profitability per acre for the grower, isn't it? Like, people talk a lot about yield per acre, but I think in some ways we forget that there's so many cost savings that you can achieve if you're reducing, say, synthetic inputs. I mean, I'm not myself an expert on regen ag, and so we could, I'm sure, go on about the various different benefits and elements, but that's something that always comes up for me when we talk about the whole yield thing.
The whole yield thing.
The whole yield
Just
thing.
that little thing. Yes.
Yeah. that elephant, that 800-pound gorilla in the room.
100%. Yes.
Yeah.
I keep thinking about your insight about the need for communication among funders. And I'm looking at the examples of the ways funders communicate today. One example being, the Regenerative Food Systems Investment Forum, the events that they have, speakers there. And I'm really curious, there's a number of other events as well, or networks, but I'm curious what specifically, maybe one or two examples of communication gaps or ways we could add or change communication opportunities among funders that would help drive a more systemic approach.
So I think this is actually about more than communication. I think there is something about actually aligning how and what we finance and fund. And there I would say, and there's a comms element to this too, but you hear a lot about catalytic funding in the regen ag world, right? That's something that pops up quite a lot. And in particular, it's used in the context of major philanthropic funders or sometimes very impact-led impact investors. And I'm getting this sense, this is totally anecdotal, but based on the last 9 months of work, I think there are a lot fewer catalytic dollars out there than we think based on the narrative. So everyone wants to feel like they're being catalytic, of course. But I think in reality, acting like that risk-taking, first loss, courageous capital, I think there's probably less of that than you'd think. Mm-hmm. So that's one way that I think we could really shift things in the system, is if we actually were quite deliberate in how we thought about catalytic capital, because and there's all sorts of potential interventions just there that I think we could create if we aligned better. And then, of course, you'd create more alignment between philanthropic funders and commercial investors. as well because of that de-risking effect. The other piece is that there just is not enough understanding, I think, about the buy boxes of institutional investors. So we know that there are some institutional investors who are regen ag curious, let's say. So the question is, why are they not writing those big checks? And I think that's something that we need to understand better, because then you could create financing structures, and maybe some of it is also about data, I suspect, that actually bring new types of investors into the regen ag space.
Can I push back a little bit on the assumption that there's not enough capital available? I was just talking to a funder at a catalytic family office who said they're actually deal flow constrained, not capital constrained.
Yeah.
And I was involved in a conversation with an institutional wealth management firm, which was asking, how can we put $500 million to work in the space? And there's just not vehicles to do that at scale right now. So my assumption is that the dollars are there. It's just that the returns are unclear, and because of that, the vehicles don't exist at scale yet.
So my response to that, and this will sound cagey, but is both of those things are true, or rather all three of those things are true, because you've mentioned something about the deal flow constraints, but also what I'm hearing you say there as well is it's about right sizing the capital. So there is something
I think what
about,
I'm saying is that there are large institutional investors that are interested in the space and want to put hundreds of millions of dollars of capital.
Yeah. And there's nothing to absorb that. The other thing that's needed, which we haven't talked about yet, but is this kind of almost like an incubation function that supports the things that are not easily investable, but actually create these really critical enabling conditions in the system. One of which is financial technical assistance that gets more entrepreneurs investment ready in this space. Because you're absolutely right. I think there is that mismatch as well. And there are also intermediaries out there in the system right now who are looking for bigger checks and not getting them. So we know that too. Partly these are, all the constraints you've mentioned is it's hard to underwrite it. The returns are sometimes difficult to capture, quantify. Sometimes it's just a question of time and track record, isn't it?
So this goes to the capital orchestrator, as you're calling it.
Yeah.
Can you tell us more about that? Where are you at in that process? How do you envision that? That's another new phrase. Like, what the heck is a capital orchestrator?
Yeah. So a capital orchestrator, the way we're thinking about it right now in the context of this regen ag work, is simply a platform that helps change the way that money moves within the system. And the expression of that for us with this work has been having a platform that essentially has 4 core functionalities within it. One is being able to provide a kind of system intelligence engine for this ecosystem. So that's probably both about holding and sharing that kind of systemic capital deployment framework for regenerative agriculture, but also being able to understand and track indicators of system change and system health, so that as you do the work, you're understanding how the system is evolving. Being able to understand, and you're going to like this, Patrick, but how capital is flowing right now, because I know that you're really focused on this question as well. So where is capital going? And then therefore, where is it not going that it needs to go? Once you have that system lens, you are able to actually see that, to have that gap analysis. So that's one thing, is this kind of system intelligence engine for the movement. And then another thing that flows from that is this kind of systemic matchmaking program almost, where using that system lens, you're able to better connect capital sources with shovel-ready deals, and possibly even start to build investor coalitions around systemic needs areas, right? So that's another function. And then also, I think being able to hold a pot of money, but specifically with a view to being able to anchor the critical needs areas, which are really hard to finance in the system. And in doing so, bring more capital allocators to very particular tables. And then the fourth function is a kind of field building function. So this is about all that stuff about kind of understanding regen ag better as an asset class, building investor confidence and knowledge through things like education, storytelling, convening communities of practice around particular questions and challenges, that kind of work. So it's those four things, but working very synergistically with one another, right? Because actually elements of this do exist already, but they're just not tying in together. So that's how we're thinking about the Regen Ag Capital Orchestrator at the moment. And the process we're in has actually been amazing in that we basically did a design and build with 20 other organizations. And that's been so cool and interesting because I think financial platform design isn't normally done that way, you know? So that's been absolutely brilliant. And people have shown up in a way that I think is amazing. And we've tried to create a kind of microcosm of the system with this group. So, you know, we invited the allocators, the intermediaries, the funders, the academics, the farmers, the NGOs. You know, we sort of tried to bring plural perspectives to this table. And we've literally been rolling up our sleeves and like tackling everything from the big picture ambition to the kind of nitty gritty stuff of like, you know, what are the boundaries of this work? How is this going to be governed, et cetera? So yeah, we're kind of at a point where in the next few months, we're going to be wrapping it up and sharing it more widely. Although we have been kind of working out loud through regular blogs and so on. But the idea is to be able to at least launch the concept by the end of this year, really.
That's very exciting.
Yeah.
Awesome.
Agreed.
I'm
Fingers
curious.
crossed.
Yes, you've got this. I look forward to that. You talked about systems intelligence and you talked about just now getting those 20 entities together to have these conversations and to build together. I'm curious about this. To me, feels very high trust because I'm sure you had entities in the room together that have a secret sauce or a certain way they want to do things so that they can preserve their ability to generate returns. And so I'm thinking about how do you build that trust? And then how do you get the data that you need for that systems intelligence you talked about? Is it coming from those entities or are you having to go elsewhere for that?
So the capital orchestrator is still just a concept. So those details we haven't gotten to yet. Implementation phase is what's next. And that's the thing we're really keeping our fingers crossed for because we really wanted to move off the page and into the real world. But you're totally right about the trust thing. And I was thinking about this recently. In effect, we spent a year and a half building those relationships and building the trust to actually be able to come to this point where we could convene a bunch of these organizations and individuals and have them show up for this work. So I think part of it was just, it took time and effort. And you can't rush trust in some ways. And also, I think in some ways, because TransCap is a kind of neutral steward of this work, that tends to help as well. And that's a weird thing to say, but we're not rooted in the Midwest. And we're not ag experts. And in some ways, everybody else in the room can fulfill some of those bits and pieces. Having us be a kind of neutral steward that is really trying to get the architecture of this right also means that we don't really have vested interest in that way. So I think that is also really helpful as well. And I think there's a moment right now in the regen ag movement where people are sort of going, okay, we need something that's bolder now. We need also to take collective action to the next level. We need more JVs. We need more mergers in the kind of nonprofit world in some ways, right? And so I think people were also ready for something like this. It had some resonance, I guess, in the system.
It'd be great to talk about each one of these 4 areas that you're working on a little bit more. The first one on systems intelligence, there are very few organizations that sit in linchpin places in the system to see the capital flows. So I'm curious about the data sources that you're thinking about for that very first foundational element that is an assumption for everything else. Where does the data come from for the systems intelligence?
I think, and you will know this, but I'm not a data expert by any means, but from everything we're seeing right now, it needs to sort of come from a multiplicity of sources. And we know that, and this is sort of fairly recent development, but we know that there are a number of entities that are kind of building platforms that track different bits of deal flow. And so again, I think that there will have to be some reliance on trusted partnerships in this space. And also, as you know, there's a real kind of need to go beyond user-entered data towards, scraping what's publicly available. So I think it will have to be a multi-pronged approach. And yeah, we're very, very much trying to still understand what the taxonomy of such a platform is, let alone how you get at the data. So it's very early stages. One of the things that I think, obviously data about capital flows is one challenge. The other challenge is understanding what indicators you even need to track. So this is beyond just capital flows, but it's like, what does it mean to assess the health of a system or movements in a system? So that is taking that transition map to a whole other level.
A couple of the other functions that you talked about for this capital orchestrator, systemic matchmaking and being able to really see how to prevent some of this dizziness from occurring by just being that central point that can direct relationships and direct flows.
Yeah.
And then you talked about the fund part of this, the function of that. And it's clear that you aren't trying to be a fund, but having the deployment of capital be like one of the core outcomes of the work that you're doing. How will you think about do you think that it's right in this mechanism of the capital orchestrator that one of the metrics for success is how much dollars are flowing through your influence?
Yeah, that's a really interesting question. Maybe. I think we have been talking more so about a kind of headline goal of practice acres or acres impacted, which is not to say that, tracking financial flow influence is irrelevant or that we wouldn't do it. But yeah.
Nice. I like that too. I would like to think more in terms of acres and things happening on the ground, because that is so tangible. And that's really what, from an impact and systemic change perspective, we want to see very tangibly.
Exactly. It's a kind of good headline goal. And then, of course, you have a number of other things that might sit alongside that. But as you say, that's the tangible thing that you want to see at the end of the day.
Mm-hmm.
I think you had alluded to the fact that there's going to be a fund as part of the orchestrator. Is that right?
That the orchestrator will hold some money. I think that's something that we would like to see, but not necessarily to create another kind of regulated entity. Much more likely, I think, to work in partnership with an asset manager and to be the sort of strategic coordinator of the money.
What are some analogs for that? Like, have you seen that work in other industries? I tend to think about these types of things as stimulating market engagement as opposed to some sort of like interpersonal, weaving.
So I think probably a close analog to what we're trying to do is Reset, who did it in the food waste space. I think it's not an exact analog, but I think it's probably the closest thing to what we're trying to do and has many aspects of, I think, what a regen ag orchestrator should do as well. So, the insights engine, I think, has been great for that challenge area. But also they have done that kind of orchestration of individual investors into syndicates and interest groups, right, around specific solutions areas. Another one that I think is an interesting analog, although in a completely different space, is the Groundbreak Coalition, which the McKnight Foundation catalyzed in Minneapolis, St. Paul. And that's focused on racial justice and trying to catalyze more Black-owned businesses, provide better mortgage products to Black residents, and so help create intergenerational wealth that ultimately is going to address some of the root causes of racial inequity. And so that's an interesting one, I think, also in that they are working through with a multiplicity of different pools of capital and capital types, and they are acting as a kind of orchestrator themselves. They have been hosting it as a kind of secretariat host, but it is still a collaborative governance model. And it's also very much a multi-stakeholder initiative as well. And so in that sense, it's an inspirational analog. And that particular aspect of the model is something that we would like to see as well and replicate.
That's great. Those are super helpful analogs. Thanks.
There are so many things, right? But I hope there'll be many more of these models emerging.
I hope so too. With your help, I think we'll get there. So it's been great to have you today. Thank you for this conversation.
Thank you.
As we wrap things up, what is one thing you want to leave the audience with?
Ooh, good question. So, I guess this idea that we need to create bold things, and we can create bold things, and that is what will help us get to a point where we're setting up financial vehicles and structures that are funding the real economy needs and not just the shiny stuff that happens to be out there. And also, this whole thing about taking collective action to the next level, because that is fundamentally really what's underpinning this model as well, is this idea that deeper collaborations and better coordination can do so much, particularly when it's underpinned by a healthy dose of trust.
Wow. I agree. Thank you.
Thank you, guys. It's been a pleasure. What a great conversation to end the day with.
Thanks for listening to this episode of The Business of Soil Health. Our goal is to explore how new financial tools may or may not support producers' stewardship of their soil. We love hearing from listeners, so don't hesitate to reach out with any suggestions or guests you'd like for us to feature. And don't forget to subscribe or leave a review on your favorite podcast platform.